People all over the world have lost money as a result of the recent drop in the value of cryptocurrencies. Bitcoin's price dropped to its lowest level since 2020. The value of Coinbase, a big Bitcoin exchange, has plummeted. A cryptocurrency that advertised itself as a reliable medium of exchange has gone bankrupt. A Bitcoin price drop also wiped off more than $300 billion. Even investors with a diverse portfolio of cryptocurrencies are feeling the pain. In a sell-off that dramatically showed the vulnerabilities of the experimental and uncontrolled digital currencies, the crypto world went into full catastrophe. Even as celebrities like Kim Kardashian and tech billionaires like Elon Musk tout crypto, the increasing falls of virtual currencies like Bitcoin and Ether indicate that 2 years of financial gains can vanish in an instant. In this video, we will discuss lessons learned from this crash and explore the various strategies to manage your portfolio efficiently. Hey guys, welcome to the channel. If you're new here, hit that subscribe button and turn on the notification to get updates whenever we drop a new video. Don't forget to smash that like button and comment in the section below if you have any contributions. Okay, with that out of the way, let's get into the video. Because of the tremendous level of volatility that crypto experiences, the risks and challenges that come with the crypto bear market are substantially greater. And as we observe the potential commencement of another crypto winter, with most of the major coins in the red, it's past time for us to learn from our mistakes and improve our trading investment tactics. Let's take a look at how much of this lesson this crypto winter has taught everyone before we get into how to manage our portfolios better. Number 1. Don't put money into something you don't fully comprehend. Crypto is still a young man with a lot of impressions to make. Consider the effect of Elon Musk's tweets on Bitcoin in recent times. Clearly, Elon Musk isn't the primary cause of Bitcoin's fall or rise in 2021. He's most likely been stoking the flames in whatever direction this is going. Investors are also dealing with future legislation, changes in tax reporting, and countries determining their attitudes towards digital currencies. It makes no difference what the reasons are. Even if the total value of the crypto market is about $1.6 trillion, it is still as volatile as a penny stock. In a matter of minutes, you can have a crash similar to 1987 or a reverse 1987 meltdown. Number 2. Crypto is a unique case. The stock market responded with a collective yawn as crypto markets around the world fell. As a diversified asset class, this is a good thing for crypto. It marches to its own drummer's rhythm. Some individuals believe that you should have negatively linked asset classes in your portfolio. However, this isn't the case as always. Stocks increase in value over time, therefore a negatively correlated asset would be poor in the sense that it would lose money over time. Instead, you want assets that go in different ways at times and in the same direction at other times. This has no bearing on future returns, but the dissociation of crypto and the stock market is a long-term benefit for the field. Number 3. During a crisis, the 24/7 nature of crypto markets intensifies volatility. Monday through Friday, the stock market is only open from 9:30 a.m. to 4 p.m. This is a benefit for stocks in a crash event. Investors are given the opportunity to take their breath and clear their mind. Policymakers will have more time to consider various options for keeping markets afloat. In free fall, the downward selling pressure can be slowed. If markets have been open all day, every day, it's probable that the stock market would have dropped much more than 34%. Cryptocurrency markets are unlike any other in running 24 hours a day, 7 days a week, and there's something else we've observed about the recent selling sprees. They tend to happen at night and on weekends. You may argue that some of this is due to the worldwide character of these markets. However, we believe it is simpler to influence cryptocurrency during off hours. When traders are liquidated while they are sleeping, the selling might cascade. And for better or worse, crypto has no Federal Reserve. By cutting interest rates, Satoshi is unable to soothe the markets. Number 4. To succeed as an investor, you must stay in the field. As an investor, the last place you want to be compelled to sell is in a situation where you have no choice but to sell. Forced sellers fall into 2 categories: those who sell in a panic because their emotions have gotten the best of them, and those who have too much leverage. During a market meltdown, there will always be investors who liquidate their risk assets at a worst possible time. It's awful enough to lose bone-chilling amounts of money while investing your hard-earned cash. Selling after those losses have already occurred, and it's like a double stomach blow. Only through surviving the short run will you be able to see the long run. All of this demonstrates that crypto is still the Wild West with such few rules and regulations. No matter how big you think the crypto potential is, if you don't grasp how volatile their assets may be, you'll be unable to cling on when things go wrong. With that out of the way, let's explore effective ways and strategies to manage your crypto portfolio. Managing your crypto portfolio. Traditional investments are significantly less volatile than cryptocurrencies. While this makes them ideal for enormous gains, it also means that you run the danger of losing everything if you don't respond quickly enough. Volatility is a statistical measure of stakeholder confidence, or lack thereof, in an asset's fair value. In order to track this sentiment, implied volatility may be useful. It's expressed as a percentage that shows whether the market is rising or dropping. You will not only be able to maintain what you have, but you will also have the opportunity to make a profit with a well-managed crypto portfolio. Number 1. Keep your emotions in check. Investors' extreme anxiety or greed might make the crypto market extremely sensitive to sharp ups and downs. Furthermore, blockchain, the distributed ledger technology that underpins the crypto ecosystem, is a very young technology. Nonetheless, a lot of progress is being made in this area. Do not, however, allow the excitement surrounding this technology to rule your emotions. When it comes to crypto investing, always aim to be more pragmatic and examine enterprises that solve real-world problems. Number 2. Crypto Portfolio Tracker. Various assets may be stored in different wallets, and as a result, keeping track of all your assets and staying organized can be challenging. As a result, keeping track of your Bitcoin holdings is critical. A cryptocurrency portfolio tracker is an app or website that allows users to keep track of the price changes of the various assets they own. You'll be able to correctly and efficiently manage your cryptocurrency portfolio this way. Portfolio trackers for cryptocurrencies frequently interface with a variety of wallets or even exchange platforms, allowing you to effortlessly move your assets. Take a look at some of the most popular cryptocurrency portfolio trackers: CoinMarketManager, CoinMarketCap, Quadency, CoinTracker, to say a few. Number 3. Being aware of the risks. Regardless of how well diversified your crypto portfolio is, it still runs the risk of losing value due to market conditions. There are several types of risks, and it is beneficial to be aware of them. The probability of losing money on investment determines financial risk, and markets are exposed to these risks as a result of macroeconomic variables such as changes in an index, such as the average interest rate. Learning how different types of risk affects your portfolio is the simplest method to become more risk-aware. Some investors use insurance companies to limit risk and perhaps recover from severe losses, in addition to using crypto portfolio trackers. Cryptocurrency programs are the core of the blockchain sector, but banking on the technology comes with a risk. Although decentralization is the name of the game in crypto, determining a project's worth without looking at its inner workings, usually a centralized staff, is challenging. Number 4. Dollar cost averaging. DCA or dollar cost averaging is an approach for limiting the effects of volatility on your total investment by dividing it into a defined number of periodic investments. Because DCA is a long-term investment approach, the lessening influence of volatility and price averages allows your crypto portfolio to grow more positively and sustainably over time. For example, suppose you have $1,000 to invest in Bitcoin, but the market is extremely volatile. You can play it safe and divide the money into 5 equal pieces of $200 each of which you can invest in Bitcoin on a monthly basis for the next 5 months. When the market is down, DCA might be an excellent investment approach. In this manner, you may end up spending less than you would have if the market had been more optimistic 5 months earlier. There you have it, guys. Remember, always think about your exit plan first. All good things must come to an end, as the adage goes. It signifies that nothing lasts forever and that everything and everyone is transient. Yes, considering your exit strategy before entering the market can be a smart investment and portfolio management technique. Investors feel good, delighted, and inspired about their decisions after successfully executing a trade and booking profits. Investors who don't have an exit strategy, on the other hand, are more likely to keep their positions for a long time, even if it means losing money. Situations like these, on the other hand, can be harmful to your crypto portfolio management and, in the long term, your investment methods. Successful investors consider their exit routes at every turn, even before they come into the market. If you enjoyed this video, give this video a thumbs up. Also, click the red button and turn on the notification bell so you can get alerted every time a new video is uploaded. Thank you for watching, and I will see you next time.